Welcome to the Finance and Audit Commission January 30th special meeting. This is a hybrid meeting with Finance and Audit Commission members, city staff, and members of the public participating in the downtown conference room and participating remotely. I'd like to introduce staff and Finance and Audit Commission members present. Commissioner Carol Wong is participating remotely using Assembly Bill 2449 Just Cause. Commissioner Wong, can you please provide a general description of the circumstances related to the use of AB 2449 Just Cause?
I am under the weather and do not want to spread my germs.
All right, thank you. Colin Albright, Lynn Bramlett, Jackson Garten, and Matt Normington are present. Staff present include Administrative Services Director Brittany Mello, Assistant Administrative Services Director Jared Hansen, Interim Finance and Budget Manager Ronnie Singh, Senior Accountant Ying Chen, and Management Analyst Adrian Patino. Adrian, would you please provide instructions to the Finance and Audit Commission and members of the public on how the meeting will proceed?
Certainly. Thank you, Chair Normington and the members of the Finance and Audit Commission. Welcome everyone to the January 30th special meeting of the Finance and Audit Commission, and thank you for attending. At this time, we ask that the virtual members of the Finance and Audit Commission please remain on screen for the duration of the meeting, and you will be in control of your own webcams and microphones. Staff will engage webcams and microphones to make presentations and to respond to members of the Finance and Audit Commission. For members of the public who are in attendance and wish to provide public comment on an item on tonight's agenda, after the chair calls for public comment on the item that you wish to speak on, virtual participants will engage the raised hand feature at the bottom of the screen. Those that are calling in from either a cell phone or from a landline will press *9. And if you are attending in person, you will complete a speaker card over at that table and return to staff. That concludes the instructions, and I return the meeting to the chair.
Thank you. Under the consent calendar, the Finance and Audit Commission may take action to approve routine business items in one motion unless a Finance and Audit Commission member, city staff member, or a member of the public requests that an item be discussed or continue to a later date. Adrian, do we have any public comment on the consent calendar?
All right. If you would like to comment on agenda item C1, approved the July 18th, September 5th, and November 7th, 2024 Finance and Audit Commission meeting minutes, please engage the raised hand feature. If you are dialing in from a cell phone or from a landline, please press *9. And if you are in person, please complete a speaker card and return it to me. Seeing no request for public comment, so you may continue.
Okay. And now do we open this up to see if anybody has any comments on that, or do we just approve it?
If there's no desire to comment on the consent calendar items, then we just go to a motion.
Okay. Does anybody have any comments on that? Okay. All right. So Adrian, if you want to state the motion.
Motion to approve the consent calendar.
All right, do you have a motion and a second?
Motion.
Second.
And all those in favor? And the motion passes unanimously.
Under regular business, the Finance and Audit Commission considers recommendations from city staff on policy matters or administrative actions that require Finance and Audit Commission approval. Our first regular business item is to review the investment portfolio report for December 31st, 2024, and recommend receipt by submission. I'll introduce Management Analyst Adrian Patino to introduce the item.
All right, thank you, Chair. So we have the latest installment of the city's investment portfolio report for the quarter ended December 31st, 2024. So in this, during this period, the city's fair market value for its total portfolio was $202.27 million, with an amortized cost basis of $203.64 million, which equates to an unrealized loss of $1.37 million. For the period, the total portfolio, which includes corporate bonds, government agencies, government bonds, as well as the city's LAIF balance, yielded 3.95%, with a weighted average maturity of 2.02 years. In addition, the environmental, social, and governance score, average score changed slightly from 3.21 in the prior period to 3.29, with a score of 3.0 being average. So that signifies that the city's investments are slightly below the average. So that concludes my brief presentation, and I return it to the chair.
Okay, thank you. Are there any clarifying questions for the Finance and Audit Commission before we take public comment? No? Okay, Adrian, do we have any public comment?
All right, if you would like to comment on agenda item D1, review the investment portfolio reports for December 31st, 2024, and recommend receipt by City Council. Please engage the raise hand feature at the bottom of your screen. If you are dialing in from a cell phone or from a landline, please press *9. And if you are in person, please complete the speaker card and return that to me. Seeing no request for public comment, so you may continue.
Okay, so it's open for discussion by the committee. I guess I had just a quick question. There's a table 1 here that is a recap of the the various investment items by security type. How does that compare to the last quarter? There, I didn't, maybe it's here, just see, is there a quarter-over-quarter comparison? It shows changes.
Don't include a quarter-over-quarter comparison of that
Okay.
exact table in the staff report.
I think maybe one time when we had 2 investment reports, 2 quarterly reports being asked for approval at the same time, we may have displayed the data differently. I think that due to the timing of our meetings, for that particular instance, we had to bring 2 at once, but normally with the one, we don't do the side-by-side comparison.
Comments from them?
Well, no comment. I mean, it's, invested conservatively, given the, the nature of the organization.
All right, Adrian, you want to see the motion?
Yes, motion to recommend receipt of the investment portfolio reports for December 31st, 2024 by City Council.
We have a motion and a second for that.
I'll move, we approve it or accept it.
Second.
And all in favor? And it, motion passes unanimously.
Great, our last regular business item is to review the annual comprehensive financial report for the fiscal year ended June 30th, 2024, and recommend receipt by City Council. To introduce, I will introduce Assistant Administrative Services Director Jared Hanson to introduce the item.
Thank you. We're gonna pull up the presentation here. So the item for you tonight is the draft copy of the annual comprehensive financial report.
And maybe while we're pulling that
Just
up, we
a
can
second.
introduce Mark.
We do have Mark who here from the Boone Group, is our auditor. Do you want to introduce yourself, Mark?
Oh, yes. My name is Mark. I'm from the Penn Group as an audit manager on this job. So,
Nice to meet you.
Working closely with our team over the past several months of preparing the after for your consideration this evening. Also, a special shout out to our senior accountant, Ying Chen, who works tirelessly to help prepare the ACFR and getting data over to the auditors, along with some of our other supporting account staff. So thank you. Thank you.
Before we begin, may I just ask a question? So I didn't realize initially when I started following the city's finances that the staff prepared this, and then is that correct? They prepare the report and the auditors review it. Is that correct?
Well, it's more nuanced.
Yeah, I'll have Mark answer that question
Okay.
for you because
Good.
the staff, we are responsible for all the numbers and providing the information to the auditors. They actually put it in the format and put the notes together and do all the proofing and stuff, or not proofing, but all the formatting there. Mark, would you kind of explain that just a little bit, please?
Oh, I'm sorry, it looks like Commissioner Wong has her hand up.
Oh, okay.
I did not have my hand up.
Oh,
Nope, that's
never
okay.
mind. That
That was
was
a cursor.
Adrian's cursor.
Okay.
Oh, yeah, actually,
Go ahead.
yeah, we're assisting the city to prepare the aquifer. So the city prepared the trial balance, we audit the trial balance and all the schedules and put them together as the aquifer into the financial statement report to comply with the GFOA and the GASB requirements. Yeah. So is the preparing the aquifer is the responsibility of the city. Yeah.
So, we go through the act where we put this together, so just a quick little overview. The city, I'm sure that you kind of, our agenda will go over that, talk about a little bit about the services provided. I want to just talk briefly about the basics of fund accounting and why we use funds and kind of the different types of funds. We'll talk about a little bit of the revenues and expense sources, give you a quick overview at a high level of the city's finances, of general fund and then cities in total. I'll show you a little bit about some revenues and expense trends for the general fund. And then kind of walk you through what the report has in the various different sections that are in the act first today. So the first item that we have there is just a little bit about Menlo Park Incorporated. In 1927, we have 10 square miles and a population of 33,780. 98.5% are high school graduates and 72.7% have a bachelor's degree or higher. There's, oh yeah, go ahead.
Was that the second incorporation? Because I believe we were incorporated twice.
That, I don't know the answer to
Okay.
that question.
And us on that one.
Okay,
I don't know the
yeah,
answer to
I'm
that one.
almost certain we were,
How interesting.
yeah.
That one was the one that I've had that's been in the act for a bit, so
I think there's two.
there might be.
Yeah, this
That's a good
isn't like I
question.
got you observation,
I
but
have no idea on that.
yeah, they were and they decided not to, and then they decided again because they wanted money for streets. This is what I was told, but the Historical Association would know for sure.
It was a brief incorporation from 1874 to 1876, which included Fair Oaks, which is now Atherton, and Ravenswood, which is part of East Palo Alto now. Then it was unincorporated and then reincorporated in 1927. So good history there. Did not know that. So this is the current incorporation, I should say. 13,857 households. And of that, the median home price is $2 million. The annual household median income is 206,588. And the citywide unemployment rate is only at 2.9%, which is below the state and national amounts as of the end of the year. So just some good things about that. We are a full service city providing all sorts of services. I'm sure you know, police, storm, drain maintenance, public works, street roads, infrastructure, engineering, vehicle, building maintenance, community development department, this building safety planning, our housing programs, our library community services, our parks, our pools, as well as the libraries in the city. Facilities has provided solid waste and water, and then of course the general administration of the city, our city management, human resources, finance, IT. I did forget to put city clerk on there. We don't.
Technically falls in the city manager's
It does
office.
technically fall under that, so I didn't forget it, just, I didn't call it out separate. But we do provide that full range of services, and to help us maintain that, we employ what's called fund accounting. Fund accounting is simply separate pots of money that we set up to track resources that are used for specific purposes. And each source of the money determines how that can be spent. And when we combine all that together, that's what you end up with in the budget as well as in the annual financial report. if you think about the funds, each is equivalent to being like its own individual business with its own separate checking account. We do pool all our funds together in one account, but we do track as if it was a separate account. And we currently have over 60 different funds that we track and manage, ranging from general fund, enterprise, special revenue, capital projects, and internal service funds. I'm going to talk about those here in just a minute. So don't worry about the definitions of those yet. The biggest fund is the general fund. It is our primary operating fund. The definition of the general fund is it records anything that's not required to be recorded in a different fund. It's the catch-all bucket, basically. It is generally derived, gets its revenues from unrestricted sources. And some of those revenues still can be designated for specific purposes, but they're still recorded in general fund because they're not recorded elsewhere. So examples of those, we have all the different tax categories. So property tax, our transient occupancy tax, your sales tax, your business license fees, your franchise fees, your permits. All of those are general revenues that can be used for the general operations of the cities. And again, most of the operating activity for the city is going to be recorded in the general fund. The second category is our special revenue funds. And these have specific revenues that are legally restricted for a specific purpose. So a good example of this one would be the in lieu community payments for community amenities. There we go. I'm trying to get the name right there. I listed some of them there. Trying to remember them, and I listed those. That money comes in for that specific purpose. That's the only place that we could spend it for, is on that specific purpose for those community amenities in that specific area. And so those are recorded and tracked separately. And we have over 46 of those that we currently track and manage at this point. The next categories are capital projects funds. These are revenues that are collected to specifically pay for the construction and acquisition of capital assets and capital facilities, as well as the infrastructure. And we record these in 3 separate funds. Our general capital improvements, we have our Bellhaven Community Campus, and the Library Addition Fund. The debt service funds, the next type of general governmental funds, and that is used to collect money to pay for the debt service of the city. So the bonds, the principal, and the interest on those. And we have 2 of those funds, which are Measure T debt service fund, as well as the Library GO 1990 bond fund. Nice part about that one is this is the last year you'll see the Library GO 1990 bond fund on financial statements, because those are fully defeased and paid off, and the last of the funds was transferred to Bellhaven to pay for the addition in the library in Bellhaven Community Campus.
And GO is general obligation.
Yes, I do miss that later, so thank you, but thank you, GO, general obligation. Enterprise funds, they're our next type of funds. These type of funds are the business type activities. And so these are more run like you would expect to see in a private business. So in this case, this would be something like service that would come up. We only have 2 service enterprise funds currently, which is our water and our solid waste funds. Again, because they provide charges for services for the specific services that you provided. That's where the revenue comes from, and expected to recover their full costs in those charges for services. The next category we have is the internal service funds. These are specific to governments using them to track goods and services that are provided to the government itself, so within the government, or used to allocate shared cost activities amongst the different departments as a way to allocate those. Or if you think about like overhead costs, this is kind of like allocating some of those type of overhead costs. And we have 5 different internal service funds that we use to track and manage those costs. Our workers' comp insurance, our liability fire insurance, the other post-employment benefits, information technology, and vehicle replacement. And again, those are primarily for the purposes of tracking internally, and they provide services to the city and to other departments, not to an external party.
Could you say just a little bit about the fire insurance? Is that for the buildings or what is the scope of that?
That's the general liability insurance as well as all the insurance on all the buildings and.
Okay.
And our pooled insurance fund that we have, and that's where that's tracked and maintained. And then that cost is allocated out amongst all the different departments. And then the next set of funds is the fiduciary funds. And fiduciary funds are used to account for privately held funds in a trust for privately held organizations, individuals, or other governmental units. So the city doesn't actually own these resources. They're not the city's. We're just holding them on behalf of another entity. And we only have one fiduciary fund right now, which is classified as a private purpose trust fund. There's 4 different types. We only have the one. I didn't want to go into all the detail, limited 4 different types. That's our successor agency to the Menlo Park Community Development Agency. And that is used to receive the property taxes that are designated to pay for the remaining bond obligations of the former redevelopment agency. And those bonds mature in fiscal year 29-30. So we only have a few years left on those today. As we talk about different revenue sources that come from the city, we have revenues that come from taxes, from user fees, from other governments, but the main ones are from taxes. Any increases or new taxes require a general voter, a general simple majority vote, 50+1 approval. If it is a specialty tax, that requires a 2/3 voters approval. And then if we want to increase property taxes, that's only limited to whatever Prop 13 allows us in the state. On the fees side, our user fees and our rates, they cannot exceed the cost of providing services, or can not exceed the cost. If you read my spelling error there. It has to be supported by a nexus, which means that it has to be supported by the service that's being provided, as well as subject to Prop 218 requirement, which means that there's 50+1 that oppose the implementation of that fee, then the city is not able to change that fee.
Well, may I ask a question? And
Yeah, of
I don't
course.
want to drag this out, but I took a rep class recently on avoiding falls, which I thought was quite good. But I often wonder, what cut does the instructor get and what does the city get? So if they're charging it can't exceed what's required to pay the instructor in the building. I'm just wondering, is that what I'm hearing?
That's generally
Okay.
what their user fee does. So there would be generally cannot exceed the cost of providing the service. So the instructor fees, the building, all the staff time to get everything set up, the internet, the utilities, all of that's built
Okay.
into the rate and to the cost of the class.
So you don't make a profit on those, in other words. Okay.
No. They're not designed to make a profit. If it did make profit, it'd be considered more on the tax side. And
Oh,
we're not
okay.
taxing
No,
it to
that's-
go to that type
Yeah,
of
okay.
class. So,
Just curious.
on the expenditure side, there's basically 4 different categories of expenditures. We classify them on financial statements as current expenditures. This is your general personnel costs as well as your operating costs. You have your capital outlay, which is for the purpose of buying equipment or constructing, as well as reporting the depreciation and amortization. You have your debt service, principal retirement, the payment of debt, and the interest related to that, as well as transfers to other funds. And then on the personnel, this is where you would think mainly salaries and wages, your retirement, your fringe benefits. I'm not gonna read this whole list because it's quite a long list, but all the different components that go into the personnel costs, including the 2 big ones, which is the normal CalPERS retirement contribution, as well as the unfunded accrued liability that shows up as the pension liability and obligation. Financial statements. And then on the operating side, this is your normal materials and supplies, your professional services for legal, audit, contracts that go out, paying for the utilities, the power, phone, the internet, as well as any trainings, meetings, and dues that the department may have, or things that may come up that they need to in order to meet their operating costs or to meet their operations. And this is where the charges for contributions to these internal service funds goes, or where the recovery of those funds go, where each department has a budget set up to pay for their portion of those internal services. Then on the capital outlay, again, purchasing of equipment, vehicles, equipment charges, generally one-time costs on purchases of equipments, where you have construction costs that are gonna be generally ongoing, or a larger project such as a facility improvement or infrastructure such as a large road being built, or improvements to the water system, new parks, new library. The Bellhaven Community Campus is a great example of that. It took multiple years to build. On our financial statements, when we capitalize those, or when we make them a capital asset, that threshold, anything that's above $5,000 per. And then debt service, just a little bit about that again, principal and interest payments. Here's your general obligation bonds, or your GO bonds, if they're commonly known. There's two types: the general obligation and general obligation refunding. General obligations like the initial issue, where the refunding is like paying off and refinancing your mortgage. That's what a refunding that would do. We also have payments that go for leases of equipment. And also a new one this year, or not this year, but a new GASB government accounting standards board required us to record any subscription-based information technology arrangements, or SPIDAs or SPIDAs, depending on how you want to say it and how people say it. Those are generally long-term contracts for an IT service that's provided that we have a benefit and the use of that goes for multiple years. And then you have fiscal charges such as your trustee fees on your bonds, holding that money into account, and for the administration of the banks for providing all that services, as well as any premium or discount amortization that goes into that. So that's kind of an overview in general of kind of everything that goes into building our financial statements. When we look at the general fund just by itself, the general fund has about $76.5 million in revenues that came in this past year, about $73.8 million in expenses that we spent. So the total increase to the fund balance was about $2.7 million. For the city as a whole, and when we put everything together, total revenue is $151.9 million, expenses $117.6, and the total change in our net position was that increase of about $34 million. Break down a little bit of the general funds. I've mentioned different categories of where the taxes fall and what the revenues are. You can see that the biggest revenue source for the general fund is from our property taxes. Property taxes about 46% of what our general fund revenues are. Our next biggest revenue source is our transient occupancy tax, or TOT tax, which is at the 11.8 million, or 16%. And then next is on the expenditure side. When we look at expenditures by department, our biggest expenditure is related to our police department. That has about 25% of all general fund expenditures go towards police. Next is your public works at 19%. It's about 14 million. And that's paying for all the staff that maintain the roads and equipment, as well as all the Next is your library community services at 16%, and everything else kind of falls below.
I have a question.
Yeah.
So we have investments, so clearly we've put money aside. Are there limits in that? Let's say, for example, I know we have to have a balanced budget every year. Though I didn't know exactly what that meant as it pertained to setting aside money for investments. Is there a limit to that? I mean, if the city wanted to, for example, set aside even more money, would the state then not consider that a balanced budget? Is there limits to that? I may not be asked, do you understand what I'm trying to ask, or maybe not?
With a balanced budget, the goal there is that your expenditures don't exceed what you anticipate you're gonna bring in revenues. That's what we're really trying to
not
do
the-
for a balanced
okay.
budget.
Okay,
Now, if we said, oh, we think we're gonna spend more because we're gonna take that money and set it aside and we're gonna, you know, increase what we spend aside, even though we don't plan on bringing it in.
okay, I
How would
guess,
we pay, like, where would that money come from? I guess is the.
yeah, you've answered my
Question.
question.
Okay.
So the term balanced budget means you don't spend more than you take in.
Correct.
But if you want to spend a lot less than you take in, that's okay.
Then you
There's no
absolutely can.
limit.
Mhm.
Okay, all right.
Yep.
Thank you.
And then even with that, like there is some money that we know is left over from prior years that has been accumulated. We can use that as one-time funds to pay for things in the current year if the expenditures may exceed revenues.
Like they've been doing.
Like, yeah, I think this year it was.
Yeah, okay,
Yeah, the 800,000
right.
deficit.
Yeah, it was like 800,000 deficit in total for general fund, which means we plan to use about 800,000 in reserves.
Reserves.
Yeah, and you can see like this year, we had about 2.7 in revenues exceeded the expenditures. So we know we have enough reserves to cover that.
Okay.
deficit.
The goal is ongoing revenues cover your ongoing expenses. We can take. One-time costs, and we have different funding mechanisms for those, but you want your revenues to equal your expenditures. Or savings, but generally they're gonna be approximately.
I think the last thing on here before I jump into kind of walking through the ACRA here is going to be your expenses by category. And this is the chart that for whatever reason it's being very weird and it wasn't updating the numbers correctly and I don't know why it was throwing a weird category out here that wasn't even on here. And I'm like, I don't know where it came from. But the general fund, most of our expenses for general fund are going to fall in the current bucket, which again, those are your personnel and your operating costs. And that's about 85% of the general fund's budget goes to ongoing operational costs. There's a small amount that goes to transfers. That's our next big bucket at about 9%. Most of those transfers are going to pay for capital outlay in the general capital improvement projects fund or to pay for debt service and other funds. And there was an extraordinary expense, one-time expense that was not anticipated of 4.8 million. So that category in here, where you didn't see that in the other areas, but that was our total expenses for the year, kind of how they're broken up. When we get to the act for an annual comprehensive financial report, broken out into some basic sections here. You have an introductory section, and this is unaudited information. So this is the transmittal letter. This is the letter that city management writes. City manager signs, says this is what's happened in the financial statements for the year, gives you an overview of the city, kind of the environment in which we're operating, and what's going on and what's happening. Before we get into the financial section. Next section that we jump to is financial section, and this includes the independent auditor's report. This is what Mark and the Boone Group is doing and providing for us. Is this one document in here, and this is the one thing that we look for and hoping that we get good information on, which we did, by the way. I'm not. Our next section is our management session analysis, and this is provided by the finance staff to analyze the financial statements and kind of go over them in a high level to give you information about what's going on within the city, as well as the financial statements, how they're broken out, how they're outlined, what information is contained in them. And this is required information, but it is unaudited information. The auditors review it and say, yeah, it looks good in relation to what you've already provided, the numbers match, but they don't go through and audit every number that's in there or look at that in particular detail. We get to the next section, the basic financial statements. This is the part that the auditors spend their most time on, and this is where what they're auditing is the basic financial statements, and I'll break those out in just a minute, as well as the next part, the notes to the basic financial statements, which explains in detail all the information that's happening in financial statements. And when you look at the ACFR and you say, what's the financial statement section? Well, that's about 5 pages. And then your notes are about 15 to, about 3/4 of it is notes. And then the rest of it is the supplementary and required supplementary information. which are all unaudited numbers, but provide supporting details and schedules on what's happening in the financial statements. And then the last section is the statistical section, which provides the general overview of the environment in which the city operates, as well as the trends of what's happened over the past, in about 10 years. The tax base that we have, some general city operating statistics, and other information that is provided there. Looking at the basic financial statements, it's broken out into 3 different sections. I already talked about the notes, so I'm not going to mention those. But when we talk about the financial statements of the city, we talk about it in 2 different ways. We talk about it, one as the government-wide, and that's the government-wide financial statements. That's the city as a whole, and we bring everything together for the city as a whole and present 2 statements, the net position and the statement of activities. This is in like a business, you would consider this kind of like your income statement, your balance sheet, right? This is kind of what that is. And then the fund financial statements is our second section. That is broken out into our governmental funds. Those are the ones that are the general fund, all the special revenue funds, the debt service funds, the capital project funds. They present a balance sheet as well as their changes in fund balance. These use a different basis of accounting than we would normally anticipate or you normally would see in a business or in a normal operations. Because we're concerned in the governmental funds mainly with the short-term effects or what's happening and what we can spend our money on. Because when we talk about government and what we can spend our money on, we're really looking at how are we going to budget for next year? What resources do we have available for us in the short term in order to be able to pay the bills and to operate and to do the things that we need to do as government. So these focus on the short-term outlook for the government. They are going to exclude things like your capital assets. There won't have your long-term debt on there. But when we go to the government-wide financial statements, we do a reconciliation, which says, here's what's in the governmental funds. We're going to add in our debt service, or we're going to add in our long-term debt. We're going to add in all our capital assets. And now it looks more like what you'd see in a normal business. And a lot of that is driven when you think about capital assets in particular. We have a large amount of capital assets, and those capital assets are things like roads and streets, right? Well, we can't do anything with the road and street. I can't go sell a road and street and make money off of it, right? I mean, I guess we could technically, but nobody's probably going to buy the road just because they want to buy a road, right? I don't.
I was thinking put a house on
Maybe,
it.
maybe they'll put a, who knows, but you know, it's generally not something that we can do or that we can use. So we're not really concerned with how much in these governmental fund statements, how much the road is or how much value it has, because it doesn't really mean anything. It doesn't help us in any decision-making process to know that we have $150 million in roads. Doesn't mean anything to us other than we know that's how much road is. What we're more concerned about is how much does it take to maintain those roads? How much does it has to keep those roads up to the standard that they need to be? How much does it cost to replace resurface those roads if we need to, put in the new equipment if we need to put in, buy the equipment to pave those roads and things like that. That's what we're more concerned about. So again, these focus on the short term. For the proprietary statements, these are your water and your solid waste. They're more concerned with how does it impact the rate and the customers, and so you'll see these prepared on a normal basis of accounting that you normally see, or the full accrual basis of accounting, which do include the long-term assets as well as the long-term debt in those. And then you'll see the fiduciary statements with their 2 items that are included, and then the notes. And that's kind of a quick overview of the ACFR and what is all included in there. In the required supplementary information, you'll find a lot more detail. You'll find combining statements which take all of the different funds and say, here's each individual fund and what's happening in each fund, and then it rolls it up into the governmental funds balance sheet and statement of revenues, expenditures, and changes in fund balance. You'll also see a comparison budget to actual statements for those. some information on the pensions and the long-term debt are also in those areas. There's a lot of information that's in the ACFR that you'll get to and that is there. But the most important part of it is the opinion, right? And what is the opinion on that? So I'm gonna have Mark just for a minute kind of explain his process really briefly. What do you look for in an audit? Where do you, and then kind of what is the overall opinion that the Coon Group is rendered this year? Of course, this is draft opinion, I should say, right?
Yeah, this is a draft. Also I want to mention that we do express the audio opinion on the supplementary information section.
Okay, I think I said unaudited, didn't I?
No, it's audited. The required supplementary information is non-audit. We do not express opinion on that, but we do express the opinion on the supplementary information section.
I apologize. I think I had a typo in that, so thank you for clarifying.
Yeah, basically this year we express the clean opinion on the basic financial statement, you know, on the ACFR, which means that the ACFR is clean, and also we have also the internal control over the financial reporting. There's no any funding regarding that, which is the management and the financial team are doing the solid work this year. So yeah, that's what I want to mention. Yeah, thank you.
Thank you, Mark. That was as brief as I wanted you to be, so thank you. We really appreciate that, but I just want to thank you, Mark, and your team for all the hard work that you've done to get us to this point, as well as to my team for all the hard work on getting this where we're at this point. And that's all that I have with regard to ACFR right now, and open for any questions, comments, anything. I'll turn it back over to Terrence.
Can I ask a question and or point me to the right, just for me, and also sort of externally, I think seeing trends is very helpful, so I spent time in that sort of statistical section, I guess. I was struggling following some of the, just the headline number, like that you were talking about, you know, revenues and like in that section.
Mhm.
Can you just point,
Yeah, so
and
probably.
because some of them were like, you know, I know there's like this roll up and this roll up and, you know,
Yeah,
all
so
those
if you're-
sorts of things.
If
So
we're looking at the statistical sections, that is generally referring to the government-wide financial statements, and you'll see government-wide governmental activities. The governmental funds are not so that'll be anything except for solid waste in the water. That'll be the governmental activities. So if you're looking
Got
at
it, so-
specifically
So there
general
wouldn't be a
funds,
tie to your full roll up in the in the 10-year trend.
there would be, it should roll up to the general governmental fund statements, financial statements. It's formatted a little different in the stat section than it is on the government-wide statement of activities. Because that's kind of shows like, here's the categories, here's the general revenues, here's what's left, and then here's all the general revenue section. Where the stat says, here's all the revenues, here's all the expenses, this is what's left over. So it formats it just a little bit differently, but it should tie out in that section. If there's specific number,
I mean, mine just super simple, was just, you were talking about 151 or 150, just the, and then
and that would
the
be.
112, and I just wanted to see that
Governmental-
number, like.
That'll be
left
both
in yours.
governmental activities and business type activities combined together, and that would be government-wide total. So I
Wide.
think what you're looking at in the stats section. I don't think I have a copy of it here. I don't have it.
So there might be in the report, what you're looking for, the side by side comparison or trend. neatly packaged in the report, or there might be the manual way, depending on what you're looking for.
Yeah,
of
mine was
looking
just,
at our-
I guess the question wasn't for like, yeah, if I'm, city council, remember like that, I'd boil it down and sort of see trends and then, and in theory, like.
So when-
about, like benchmarking, exercise and all that type of stuff, and just wasn't sure what would be in here or what would be, someone would do sort of separately, from it, so that was. My broad question of like,
So like when you're looking at financial trends, like this schedule one will be your, the, net position by components. Schedule two will be the changes in net position. And then 3 and 4 will be the fund balances for governmental funds only and the changes for governmental funds only. So it's only looking at like. When you look at the statement activities, you're gonna have one column for governmental activities, and one column for business type activities. And then the total of that is total government, and that's the 151 that I was mentioning before. Where those two schedules are only referring to the one column, not to both of them together.
JJ, is your question partly in related? There's the 10-year comparison, but it's a comparison to Menlo Park, right? And not externally.
yeah, and also just trying to see like,
Okay.
like how does one like.
Put it in context.
Yeah,
Yeah.
sort of how's it
Yeah.
sort of trending and not just from year to year and sort of thinking through it. So if I were thinking about use cases, I'd want to look and say like, okay, last 10 years, like
290.
how much of our revenue's gone up, how much of our costs gone up, I mean, and just sort of looking at that in the aggregate, and then you can kind of drill down and there, things that would jump out and exceptions and things like that. That's where.
So you're just gonna pull up,
Okay.
page 295 here, so this. I'm sorry for those that are looking at me, that I can't point this out. Doesn't really show very well, maybe it will if I go over here. And wave it, and that's like, this section talks about governmental activities, that section's your business type activities. And those two sections combined are what's gonna tie into the city as a whole, so. Or it's about 15, 17, 19, so the next page. So there's your governmental total, there's your business type total. So for 24, 530 there, and total business type activities. I'll say, and this is just the net investment, so this is only the fund balance section, or statement net position section. This is not the full financial statements in here, this is just what's restricted at the end of the day. So when we look at this, like this one is 375, that's the amount that's represents the capital assets less any debt service that's needed to pay for those. So this is where all your roads, your streets, all the infrastructure for the city, all the city buildings is gonna show up in that 375 there. That there's all the restricted for capital projects, for debt service. Community development will be most of that's your housing funds. So then your unrestricted net position right there, that's the amount that we look for mostly. It says what's available to use after everything else. So at the end of the year, we ended at about 24 million for unrestricted governmental funds. That's what's available to use for the general government as a whole. It's basically what that number is for it. That's not technically restricted. Business type activities, 28 million in infrastructure. Most of the governmental or business type activity is in infrastructure as well, but they have about 11 million left in their fund balance. It's not restricted for any specific purpose. So these will tie there. That if you go up to computer, you go up to the statement of activities, which is how many pages up can we go? Way too many. Two. One. 10. 110. 810, so go down to the very bottom. That Actually, I'll go back 2 more pages, I'm sorry. This is stated actually off in that position. And this is that section, so that first section, that's what we were talking about right
Mhm.
there. So this is your 533.
Mhm.
There's your 64, that's how it's broken out here, that's how it's broken out here. That's what you're seeing in the financial trend section that we were looking at prior, is that position and that section right there. 533, your 64, your 24 we mentioned, there's the 11 we mentioned. 375 and then 28.
Yeah.
Does that help?
Yeah, I think so. Yeah, thank you.
And then the next table, the table 2 is. I don't remember what that is. That breaks it out like this, where you look at the activities and say, okay, what happened in each of these different positions in here, where the total kind of breaks down that way.
Thank you.
Yes, I see Carol has a question.
I have 2 questions actually. First question is, what's sort of the process for finalizing the ACFR and the timeline? Will you guys be coming to us again with another draft or a final? So sort of question on process. The second question I have relates to the below market rate housing revenue fund. So I think, as my fellow commissioners know, there's sort of a downtown project that's in the talks right now. So really interested in, just from the financials, how I can get a sense of the cost of projects we've done recently and in the past. And also, I also see this note receivable, which relates to below market rate housing loans. And it sounds like the city lends money to people who work in the city to get a second mortgage to purchase property. So kind of interested in how that all works as well.
So the first question is the process, and so this is the draft that is nearly final. It needs to have a final review from the Poon Group before the official final draft is brought to the city council. We anticipate very minor changes from the draft that's in front of you. I think last year we had that situation and had a couple of minor changes that we highlighted in the staff report when the item was brought to the city council. We do anticipate bringing this item to the city council on February 11th. So their next.
So what we're kind of asking for of the commission today is that you review whatever for us, whatever questions you have, and make a recommendation that we go ahead and finalize this, the act for to be able to take it to the city council on that February 11th day, and that's kind of the next step there. We have just a couple more review items to get to the Poon Group related to the checking all the last finalization of the numbers and then assembling everything together before we're finished. I think you'll notice like one of the dates was highlighted and said January XX 2025, the date of the opinion. So we just have to like finalize, a couple of those different dates and things in order to get that finalized. And then as far as the below market rate housing goes, I am not 100% familiar with that particular program, so I can't speak programmatically to how that program or how that fund operates. What I can tell you about the below market rate housing fund is that it is in general used to pay for the actual definition. So I don't tell you wrong. That's used to account for fees that are collected from developers of 10 or more residential units to develop below market rate housing units through a down payment assistance loan, and then used to account for the fees collected from commercial industrial developers, which again increase the stock of low and moderate income houses for households for people who work within the city. I don't know more information on the below market rate housing, the loans that are outstanding in the below market rate housing. Do have a receivable of about $24 million. Those are generally offset by. Right out of there. Those are generally going to be paid back over time as the developers finalize their housing developments or the developments and pay those back to the city.
And
And to use result. Sorry.
no, one great example of that just went to the city council on Tuesday, the January 28th meeting. So the city council approved an agreement with Habitat for Humanity, Greater San Francisco, for an affordable housing project at 335 Pierce Road. And they authorized an amount of $3.6 million transfer from the below market rate housing fund to pay for that agreement to help Habitat be able to make affordable housing.
Well, I want to make an observation too, building on what Commissioner Wong said. I couldn't find it just now, but when I looked this over, we didn't have that much time and I don't, but looked it over. It seemed like the activity was low. I mean, given the importance of housing, and I was surprised that to see that, and then that, what are the back? Hopefully there's some back, room talk, if you will. I don't mean, but to have more in that fund because the city will need it with the expectations to build the housing. And I agree with Commissioner Wong, it's very much topical.
And I'll say, with the housing projects, those take many years to come to fruition. So this example from Tuesday for 335 Pierce Road, there originally was the intent for a different housing provider to build at that site. And that fell through. They released the money back to the city. And now we have a new agreement with Habitat for Humanity. And that has been a process of a few years to get to this point. And so sometimes the balance may appear to be growing, but there are projects in the works, if you will, that take multiple years. Okay.
And just also one note, there is, or when I'm in the notes of the financial statements in note 3, there is a description of the below market rate housing notes receivable. And they are used and amortized over a 30-year period to do loans with that. So we have the 24 million that are amortized over the 30 years of that. So there's 30 years worth of payments that we're expecting to get back for those particular.
Just a quick follow-up question. So I had a look at that fund and I don't see a lot of expenses. Is that because in our experience, generally there aren't any expenses associated with these projects, or do the expenses get accounted for in another fund?
Yeah, so it currently is paying for some administrative costs mostly. I think that's mostly what you'll see this year is some administrative costs that have happened as we monitor the BMR fund, as we get the payments in from those individuals that are making the payments back to the city. And then you'll see larger expenses happen in that fund as funds are spent. So the good example is what Director Mello mentioned about the Habitat for Humanity and the 335 Pierce Road. We just released and authorized funds there. So you're probably going to see a large expenditure for that. That will hit the financial statements in this fiscal year, depending on when those funds are actually paid out to Habitat for Humanity or as they go through that process in building. And we authorize release those funds, you'll see those go out. But you generally won't see those happen. You'll see those large payments go out as a one-time expense, but just the ongoing operations of that fund are going to be fairly low for just the administrative costs.
And just to further clarify, I think part of your question was on the eligibility. So I just typed in menlopark.gov/housing, and they do have a lot of great information about the below market rate housing program. And it's for households who have lived or worked in Menlo Park for at least 1 year. So there's not, so yes, city employees are eligible as folks who work here, but it is not by any stretch limited or targeted for city employees.
And I do remember there is a list that they maintain of those that have lived and worked in the city that are requesting those specific types of loans. And then when they do authorize or release funds, then they start going down that eligibility list at that particular point. But I can't speak to the exact process on that.
Thank you for that. And so more of a comment than a question. As Commissioner Bramlett also mentioned, I think sort of the downtown project is definitely very topical at this time. So I think, you know, if my other fellow commissioners agree, I think it would be really nice to just maybe get an update of any financial analysis that might be being performed, because obviously there are costs and expenditures relating to these projects. And I guess I just don't have a sense of what they are. And looking at our financials right now, I'm not sure if, you know, I'll get a better sense of looking at past information. So that's sort of more of a ask on my part.
Yeah, I can help clarify for you, Commissioner Wong. So development project finances would not be covered in a city report like this. The housing element overall does have a third-party consultant who performs a fiscal impact analysis. As if all of the units that are required to be built by the housing element were built. That's that during the housing element adoption process, that analysis is performed by a third-party consultant, not by finance. But until specific projects are in the works, shall we say, there isn't financial analysis conducted. The financial analysis is specific to projects. So in your question about downtown housing, the city council has just approved a request for qualifications, which is the very first step to see if developers are interested in those parcels and what those ideas look like for the city council to start reviewing that. The city council may then move to a request for proposal project where you'll start to get more detail. The request for qualifications is pretty high level. So there's no additional financial information at this time.
Well, I'd like to make a comment and an observation that relates to what Commissioner Wong said. So there is the opportunity cost too, and I'm thinking of our police force. And, you know, in this conversation about the parking lots, people will say, oh, our fire people can't live in town, but the fire people can stay at the station. I mean, they've got these, you know, high-end places where, you know, they sleep there. Whereas the chief said there's only one place. This is in a hallway conversation, if you will, at a council meeting where they can spend the night if they had to. And he said, we just lost a commander because he was driving to and from, I think it was Modesto. I don't remember exactly where it was, but as part of the conversation, I hope somebody is talking about that at the city level in terms of not just a one-off, you can put your name on a list to get up below market rate housing, but could there be something, you know, like a house for the police, for example? And I don't hear that discussed. And I don't know if you're thinking about it behind the scenes, but it seems to me that would be important for, you know, such an important part of the city staff. You know, in an emergency or a problem happening, we want them here. So I know this is outside your bailiwick, I think, but it does pertain to what Commissioner Wong is bringing up, I think.
Yeah, and maybe just to clarify my question or ask a little bit more. Obviously I know the developers will be doing a sort of financial analysis for their own purposes of developing. But my question is more along the lines of, have we thought about how that may increase the number of police officers we will need because we are bringing in additional residents, increase, firefighters that we need, increase the fundings that we need to provide to our schools. I'm not sure that is something that the property developer will provide an analysis on. And that's my question to whether, city finance would be kind of looking into that, or is that just not within your?
Certainly, there are a lot of items and analysis that goes into developer agreements. One good example that I think is what you're speaking about is a traffic impact fee. So a developer at a specific site will look at how how the people that they would be bringing into that development could impact the intersections around it. For example, how many additional vehicle trips could this project create? And then there's an impact fee associated with that based on that analysis. So it does need the additional detail of, for instance, the number of units to be able to make that kind of an analysis. So it comes further down the road. And then, there might be a fee to put in, let's say, a new intersection. Maybe they did their traffic flow analysis and we need a designated left-hand turn at that intersection to help reduce the traffic impacts, is an example of the kind of analysis that goes into those down the road.
So at what point would something at all come through, like? If at all come through this forum related to, I guess, sorry for the dunce question. I get your examples there. I think it just sort of, particularly given the time horizon, understand that it's, high levels for a proposal, but I think, and I would agree with Mr. Wong, and given the energy around this, I know that anybody that knows of my involvement here is like, just ask me like, what are you guys talking about on the downtown project? I mean, it's sort of on everyone's mind. And so I just don't know at what point we would see anything, and I would be interested to understand that.
Absolutely. So the city council is reviewing those items as the policymakers. This commission, like other commissions, are advisory bodies to the city council. So each commission has our own charge. We have our charge that we talked about with our work plan, our overall charge for audit and financial transparency. And so at various points, the city council may choose to request that a commission take a deeper dive into a topic. But at this point, we don't have an indication that the city council would delegate any portion of their review to this commission or the housing commission or other, environmental quality commission. There's lots of possible intersections with this type of project, but at this point, the city council is really retaining all review at their level.
Value of the parking lots that are in discussion, are they embedded in the like as an asset in the financial report?
They would be capitalized as an asset in our financials, yes. So at the point that we have further direction on what is going to be happening or where we're going to be headed, we would be able to see what those parking lots are, provide that information. We don't have any direction on that.
Yeah.
And some of it would be in the long-term leases.
Yes, yeah.
And just an example, like there's a fiscal impact analysis that was done in June of last year for the Parkline project, Parkline master plan. It was released June 20th, and there is a fiscal impact analysis that's done there that staff is able to review and go over and provide feedback on before that's actually done. So we do ask questions on that as a finance ability to answer those impacts before we, before they, but those are all done by and coordinated through community development and with their consultants that are providing those, major impacts.
I think those are quite interesting to read too. The ones from BAE, I think economics.
Yeah.
I want to kind of extend the comment because this topic is going to keep coming up. We all know that. You mentioned leases, so city-owned property that's leased, like, I think it's 1000 El Camino, the building on the corner. So, and one of my comments had to do with the public-private partnerships, and I know quite a few are like 20 years out. So maybe it's premature, but at some point, and a number are in parks. I know we don't want to develop in a park. At least that topic was discussed before. In general, but some are like 1000 El Camino Real. But I didn't see them here in this report. And to me, that's part of the city's financial portfolio, if you will.
The 1000 Camino.
Yeah.
Maryville College.
No, okay, I'm giving you the wrong name then. No, 1000 El Camino Real. So I happen to have a list of city-owned property. It may not be current.
That might be part of the.
Yeah, it is a lease. There is a staff report, and when I punched in the address, the staff report came up.
Looks like there was a staff report in 2015.
Yeah, I have it right here,
That
ground lease.
approved the ground lease, the Sixth
Yeah.
Amendment to the lease back in 2015. And that's a 20 to 30 year.
37 at
something like
sunsets.
that, yeah.
So I don't bring this up to challenge anything in the cities, but these are kinds of things that I can almost anticipate people coming up wanting to know about. And one benefit here, if you hadn't thought about it, this is what we're hearing from our neighbor, people may be saying at the council meetings. But I would love to see the public-private partnerships in here. Because even that Bellhaven childcare, I know we get money from the state, but the city's running one too, right? Right out there. And then at Nealon Park, we've subsidized what's being run there by paying for the building when it burned down, things like that. So it's kind of a bit of a gray area where, to me, we are doing things to subsidize that program, just giving them the land and in a prior year helping to pay for the building. I'd love to see all that
So
put together.
like some of those would be in the notes of the financial statements as far as the leases and what the terms of those leases are and how long they're going to be lasting. Don't know that they say specifically each individual lease item, or what they all are, but it would give you a general overview of that long-term leases and what those long-term leases are. Some of those that. Yeah. So you would find that in the
Okay.
notes,
And we're
at
gonna,
a high level again, so.
and your question might be timely, Commissioner Bramlett. I was just reviewing the January 28th City Council agenda. If you look at the agenda topics that are upcoming, there is a preliminary review of city-owned properties leased to third parties on that period City Council agenda. So it seems like that more information will become publicly available soon.
Yeah, I dialed into part of that meeting. I appreciated it.
Being involved with the feedback.
The last one. I set up my ironing if I'm calling from home and watch it.
I came in, standing room only.
You were there, huh?
I couldn't get in, and so, I watched for a little bit and then came home and put it back on the Zoom and watched for a little more and couldn't make it until the end, so.
Yeah,
No.
yeah, same, yeah, I watched on the Zoom for a little bit.
I mean, it's not, I appreciated the community engagement, quite frankly. I was that job of. And their variety of opinion, it wasn't even just one 10%, a lot of opinions are interested, so, which is good.
So I have an unrelated question, if you guys want to stick on this topic. I noticed in one of the notes that the housing values increased 5%, but property taxes actually went down in the fiscal year. And it was due to some sort of an allocation of funds. And I wondered if you could just comment on that briefly about how that works. You know, how the allocation works or whatever happened there. Because you obviously would expect property taxes to increase if housing values are going up, but in this case, they would slightly.
Are you referring to this? The sales tax allocation, and how that's allocated?
I'm sorry, I was looking at other things.
Allocation.
So some, property owners can appeal, the assessed value of their properties.
Yes.
And those can take some time to go through the appeal process, and they're frequently successful in reducing the assessed value of their property, and then we need to correct for that difference.
So that's what that is. That's for reassessments from like prior years.
That is my understanding, and I can do a little more digging and make sure that I'm providing you the correct
Okay.
information.
A significant amount of money, because I noticed that too.
Mhm.
Is there more?
The property transfer tax. Mentioned that was,
So I can so this is in your on PDF page 75.
Okay.
On the sort of, it's under the local economy section. The city's largest revenue source is resilient property tax base, contributing 46.4% of all general fund revenue in fiscal year 23-24. While assessed values increased 5% overall, actual revenue fell by 0.7 million or approximately 1.9% compared to the prior fiscal year 22-23 due to impacts of property tax allocation adjustments. So, sorry, it was what are property tax allocation adjustments is my question.
yeah, that's
what that is.
That's
Okay.
That's what that is.
So it's the lowering of the assessed value. Okay.
And then the other thing that goes into the property taxes is also the unsecured portion of the property taxes. And that varies greatly every year. So depending on the value of the new equipment that's being put into service in those particular locations to have a property tax assessed on those. One year you can have a very large assessment. The next year you won't have any assessment because there's no increase in that particular value, even though the value itself of the property has gone up. That would have had an overall increase.
Okay, so how does the city properly budget for those types of fluctuations? Like, how does that get accounted for, like in the next fiscal year budget? You know, it seems like if there's some unpredictability there, how does that get?
So we have a third party that provides a lot of the property tax assessment and valuation data to us. They're experts in property taxes, and that's what they specialize in is valuing all the property taxes. We also review with the county, their projections and numbers that they are providing to us as to what the assessed value is and what it's gone up to. And they provide additional information as well to the city to help us provide those evaluations.
Okay.
And I think, and please correct me if I'm wrong, we have the 2% guaranteed increase, and that might be part of what we, yes, for how we budget. And then, yeah, we try to, or our expert consultant tries to say, all right, this is what we think will be the amount of sales or renovations that would trigger a reassessment.
And then the other portion of, I mean, there's like 8 different portions of property taxes that go into the assessment. And one of those is also going to be your transfer tax, which is when a property is transfers from one owner to another. There's additional taxes that are assessed at that particular point. Again, depending on how housing sales go for that year, that can greatly vary. So while the increase in value may have gone up, the number of houses that sold for that particular year may have gone down.
Yeah.
Which is, if I remember right, that's what has happened over the past few years, is that property transfer taxes is decreasing significantly because not as many homes are selling and people are staying in their homes longer. And because of that, there's not that property transfer tax that we're getting, so that number is continuing to fall as well.
Thanks. All right, anything else? Or we forgot we haven't done the public comment yet. Adrian, do we have any public comment?
All right, if you would like to comment on agenda item D2, review the annual comprehensive financial report for the fiscal year ended June 30th, 2024, and recommend receipt by city council. If you are dialed in on Zoom, please engage the raised hand feature at the bottom of the screen. If you are on a cell phone or on a landline, please press *9. And if you are in person, please complete a speaker card and return that to me. And I'm seeing no requests for public comment, so you may continue.
Okay. Is any further discussion by the commission? Nope. Okay, Adrian, can you state the motion?
Motion to recommend receipt of the annual comprehensive financial report for the fiscal year ended June 30th, 2024 by city council.
Do I have a motion and a second?
So moved.
Second.
Okay, thank you.
And all in favor? And the motion passes unanimously.
All right, Chair, are there any subcommittee reports since the last meeting? Oh, that's me. All right, so the question for the group, are there any subcommittee report? Anybody have any reports on their subcommittee they'd like to do? No, okay. Next item is informational items. Under informational items, the city staff provides updates on matters of importance to the commission. Informational items are not action items, however, a commissioner, city staff member, or member of the public may request to make a comment or ask a question on any of the informational items. Adrian, do we have any public comment?
All right, if you'd like to comment on tonight's informational item, F1 quarterly update on city grant funding. If you are on Zoom, please engage the raise hand feature at the bottom of the screen. If you are dialing in from a cell phone or from a landline, please press *9. And if you're in person, please complete a speaker card and return that to me. And no request for public comment on this item, so you may continue.
Okay. You want to, so this is item F1, the quarterly update on city grant funding. Did you want to walk through that or did?
That's up to the commission as an informational item.
Okay.
We can discuss it or not. It's up to you.
Does anybody have comments and questions?
Yeah, I do, actually. It would be helpful to me. At first, I appreciate the work that goes into all of this. I mean, this is a
Yeah.
huge undertaking. Even this, I appreciate seeing it. However, what I would like to see is like more information, like, 50, let's take the Safer Bay. Okay, 50 million. So just a little bit about what that brings in or when it will end, just some kind of sense where I could put it into context. Maybe when it was awarded, where we are in the grant cycle. I'm not talking about a lot of extra work, but perhaps if a few additional details just to help me if we're not following it. When will the work be done? So we got the amount, there's a lead department, but what is the timeline basically? And what is what kind of money is coming in per year, if you will, or how does that work? So I don't know how much extra work that would be, but to me, that would be helpful.
We can certainly take a look at what we can add to those at a high level for each of the grants in terms of timeline.
Yeah, like this Middle Avenue undercrossing, I know that's been talked about for some time. But just kind of at a glance information would help.
I think we're good. So that we can adjourn the meeting. All right, thank you.
Thank you.
All right, thanks, everybody.
Thanks, everyone. See you all next time.
Thank you, Mark.
All right, thank you.